you pay attention to any news outlet, or you're in the market yourself for an apartment or even a house, you'll probably notice that the rent rates are significantly increasing. Actually, it's at the largest spike that it's been at in years. And here on my channel, you guys know I am a real estate investor and a real estate agent, so I deal with buyers, sellers, and renters on a daily basis. And it's important for me to stay up to date on all the latest news and market trends. So in this video, I'm gonna break down all the stats and why there has been such an increase on rental prices and what it means for you as an investor. What's up, you guys? My name is Lillian Chukwueze, and if you're new to my channel, welcome to the family. I drop multiple videos every single week about real estate, entrepreneurship, and investing. And if any of those topics interest you, please go ahead and like the video, subscribe to the channel, and hit the notification so you don't miss when I drop the next video. So let's get into it. So rents are literally going through the roof across the United States. And according to the Apartment List National Rent Report, showed a rise of 2.5% in rental prices from June to July of 2021, and an 11.4% increase in 2021 so far. Now, the median US rent right now is approximately $1,800 a month, according to Yardi Matrix, which is an analytics company that studies commercial real estate, which shows the multifamily rental industry had a record-setting month in July, with rents rising to 8.3% year over year, and single-family rentals up to 12.8%. And just to help you guys understand this increase a little bit more, if you have a $1,500 a month apartment is now approximately $1,625, and a $1,500 a month single family rental is now approximately $1,700 a month. So that's a major increase. Now, with the prices of homes still on the rise and less inventory, the demand for affordable apartments is still high. Prices of homes have skyrocketed over 25%, and in some markets have been as high as 37%. And now, first-time homebuyers and millennials who are buying properties sight unseen, sometimes above fair market value, so they can rent. So there are still plenty of renters that are looking for a good priced apartment to live until they're fully ready to buy their home. And the number of people between the ages of 18 to 34 have nearly doubled. Now, unfortunately, we haven't been able to keep up with the amount of housing needed in relation to the population growth, but that's nothing new. What doesn't help is the fact that prices to build and renovate homes have also skyrocketed, which of course deters some developers from starting or even completing projects. One of the main reasons for the rise of rents is because of inflation. Now, of course, as the prices of commodities throughout the US economy increase, so will rent. So that's pretty standard and it's expected, which is why the typical transition is to go from renting to owning, because in most cases, you don't want to find yourself renting a place for the same amount that you can actually own a house. So there are a lot of people moving from the major metropolitan areas that have super expensive housing to areas like down south or the Midwest, which is where it's just cheaper. And if you guys want a more in-depth analysis on the market, definitely check out my June market update video. It's about Philadelphia, but it'll give you a general understanding of the US market as a whole. And I'll link that video above and down below and in the description so you guys can check that out as well. And also, that move has become financially easier for some due to the pandemic and having a lot of jobs being done totally online or remote. Now, interestingly enough, these same expensive markets like New York, Cali, etc. have seen a decrease in rents, probably because they're seeing the results of their highly inflated housing costs. So I do believe that they're trying to solve this problem by actually lowering the cost in hopes that it will get some consumers to stay in those areas. Another reason I believe that rents are going up across the nation is actually a result of the eviction moratorium. Because at this point, many landlords are very fed up with the fact that they were not able to evict their non-paying tenants for several months, which really put a dent in their financial situations. So therefore, I believe that some landlords are actually using the increase of rent as a form of insurance to help them make their payments if the tenants do not pay on time or at all, which I truly can't blame them for. You know, it's unfortunate, but a lot of landlords have been taking a lot of heat from tenants because of rent. However, there wasn't nearly as much as assistance for homeowners as there were for renters. So landlords still requiring people to pay their rent made them look like the bad guys, even though the landlords still had to pay their own mortgages. And I can assure you that if landlords did not have to continue to make their mortgage payments, most of them probably wouldn't continue to charge for rent. But unfortunately, that wasn't the case. Now, the third reason why rents are going up is because the United States simply does not have enough affordable rentals, especially in urban areas. We know there's been a housing shortage for many, many years, and the problem is even worse now because a lot of building projects were put on hold during the pandemic due to COVID restrictions renovations, and again, construction costs. Specifically here in Philadelphia and some other large cities, there is a major affordable housing problem, and a report found that 4 in 10 Philadelphia households, including 54% of renters and 28% of homeowners, are cost burdened, which means they spend at least 30% of their income on housing costs. And most renters feel like they can't even purchase a house because they can barely afford living after paying rent and other expenses. So as you can imagine, there's a super high demand for affordable housing. By tenants not having to spend a majority of their income on housing, it will allow them to have a better quality lifestyle for themselves and their families because they will be able to save or invest that money elsewhere. But this is where it's actually beneficial to get in as an investor, whether it's your first or your next property, to purchase one of these single-family homes that is most likely owned by a tired landlord. You can basically help them get rid of their headache, which is the burdensome property, by purchasing it, and then you can put in a qualified tenant and start collecting some monthly income. Now, if your rental is priced accordingly with the market, it will rent fast. And also, if you're working with programs like Section 8 under HUD, which is the Department of Housing and Urban Development, which pays for most of the rent for a tenant, well, then you'll basically be receiving almost guaranteed checks. And in this way, you'll be part of the solution to help low-income families get affordable housing while they work to better their situations, because there's a lot of landlords who don't necessarily want to work with Section 8 tenants for one reason or another. And times like this just reiterates why getting started with single-family rentals is a great strategy, even in the most challenging of times. Because as you can see, even in the most challenging times, occupancy rates across all single-family rental regions are at nearly 95% rent growth and is increasing year over year. As I stated with the stats earlier, and institutional investors are pouring billions into single family rental homes. So if you do ever find yourself ready to sell or in a bind, there's a chance you may find an iBuyer to purchase for over market value. Now, some other reasons why single family rentals are a great way to get started, even in these crazy times, is because returns in most markets are much higher on single family rentals as compared to multifamily. And there are more single family homes to choose from, with single family units making up about 67% of the housing stock. Also, single family homes are much more affordable to buy than multifamily buildings. And of course, sellers of single family homes have multiple exit strategies, such as selling to an owner occupant, the tenant, or even another investor for a cash offer or other financing options. And one of my favorite financing options, if you guys don't know yet, is creative financing or seller financing. And if you don't know much about that, if you haven't done so yet, please check out my video on real estate investing financing options. I'll link that above and below so you get an idea of how you can actually finance your first or your next real estate investment property. And also, another great benefit of having a single family rental is that single family homes also sell faster, with houses in many markets going under contract in less than 30 days after being listed for sale. So essentially, in more cases than not, by investing in single family homes, you will be able to help out your local community by providing necessary housing, especially in this shortage, and you will receive a monetary gain for doing so. Now, to me, this sounds like a win-win, and that's always been my plan, so that's definitely what I'm focused on. And if you guys haven't done so yet, check out my other videos on how to basically get started in real estate investing with little to no money down, whether it's wholesaling or using creative financing. I have a bunch of videos on that on my YouTube channel. I'll link to some down below. And if this video was helpful for you guys, if you enjoyed this, and if you received any type of value, please go ahead and hit the like button, subscribe to this YouTube channel, and hit the notification bell so you don't miss when I drop the next video, because I'm always dropping gems. And of course, follow me on Instagram and TikTok. And until the next time, guys, I will see you later. Stay safe and stay blessed.